Dear Biboxes, I'm Pratisha, your Bibox informator. Today on Bibox, we'll be talking about spot and future trading. Being a trader in cryptocurrency space can be fun, educational, and of course profitable, but it all depends on which market works for you. First, let's discuss what both markets actually are and how they operate. What is cryptocurrency spot market? The process of buying or selling cryptocurrency and having the exchange settle immediately. For example, if I was in Bitcoin spot market, I would be able to sell or buy Bitcoins immediately. I would have direct control over my Bitcoins. From there on, I could send it to my own wallet or keep it on exchange for further trades to come. A futures market is where a participant can buy or sell contracts for delivery on a specific date in the future. These are typically used by traders as a way to hedge on another investment and to lock in profit when trading in volatile cryptocurrency markets. The financial instrument on the future market is also known as derivative because the pricing of the contract is based on the underlying security in the cash market. Now we have a proper understanding of spot and future trading markets. Let's look at some key differences. Counterparty is a process where there's a buyer and a seller for each transaction. Since the future trade settles in the future, the last thing you want to have is no one on the other side of the trade. Future exchanges utilize two risk mitigation techniques to prevent this from happening. First, we have the performance bond. To begin placing your trades, you need a performance bond or initial margin. This essentially is a crypto in your account to cover the trade obligations. Secondly, we have the maintenance margin. The maintenance requirement is a minimum amount of crypto needed to cover all the open positions. Now in the futures market, the underlying asset has a specific settlement date in the future. If you're long in a future contract, you've agreed to buy the contract on a specific date down the road. Conversely, if you're short, you have entered an agreement to sell the contract on its future date. Now this is where the traders in future market comes up ahead when it comes to hedging against the risk. Trader in future market can take this to their advantage by hedging against the spot market traders. Why not the other way around? Your ability to leverage far greater in future market. Therefore, you can purchase few contracts but hedge against a sizable spot of market position. The spot market is going to be the best for the traders who don't want to worry about the time and wants to buy or sell cryptocurrencies instantly, and of course to access those currencies instantly. Now, the futures market is going to be for the traders who wants to hedge against overall cryptocurrency market. Of course, it will make a reasonable return only if you know to predict the market correctly. Now, the spot market and futures market has its own pros and cons, but make sure whatever market you choose best suits you as a trader. In the end, it's your money you're dealing with. Let's look what Bibox can gift us with spot and future trading. Bibox has 1. USDTM futures. USDTM futures is a forward contract using USDT as a margin and USDT for settlement of profit and losses. Second, CoinM futures. CoinM futures is a reverse contract that uses the corresponding digital currency as a margin, and the corresponding digital currency is used for the settlement of profits and losses. Third, transfer funds to futures account. Transfer USDT to trade USDTM futures. Transfer digital currency such as BTC to trade CoinM futures. Fourth, select position mode. Before opening a position, first set the position mode and the leverage. The position mode has two types, cross margin and a fixed margin. Fifth, place the order to open a position. We support a variety of open positions such as limit orders, trigger orders, follow orders, etc. for your choice. Sixth, view position profit and loss. You can view the estimated liquidation price, unrealized profit and loss, risk rate, and other information in real time in the position. Seventh, liquidation. You can close the position directly in the holding position or place an order to close the position in the order area. Benefits of spot and future trading. Traders in spot market can hold and find a better deal if they are not satisfied with the current prices and terms. Traders are done and completed on the spot. Future contracts are traded in huge numbers every day. Hence, future contracts are very liquid. The futures are usually a paper transaction done by investors who are solely interested in speculative profit. This means the futures are less cumbersome than holding shares of individual stock, which are need to kept track of and store someplace. Start your future now. For that, we have got you covered by Bibox. Just go to Bibox official website, log in and click on the Future tab. There you will see USDTM Future section and CoinM Future section. You can select from both these according to your preference. For more relatable videos on crypto trading, subscribe to the channel and press the bell icon to stay updated. Download and register on Bibox now. Bibox only for you.